Hi guys, this is Ch1 and welcome to a new video of my forex trading course. In this particular video I want to talk about the importance of always checking the longer time frames before jumping into a trade, okay? Sometimes well, we see a very nicely trending scenario, a very nice trending chart, and we begin, with drawing our trend lines, drawing our Fibonacci's, well, basically go through all the technical analysis process that we follow through before taking a trade, but we forget a very important detail, which is always checking out the what's going on the daily, on the weekly, even on the monthly chart. All right. Sometimes we might be seeing a very nice downtrend, like in this case, but perhaps in the weekly chart or the daily chart or the monthly chart, even, like I say, we might be about to reach a very strong area of support in the longer time frames. You never know. That's why it's always so important. And not to just as we see a nice trend in a scenario, like in this case, begin to search for short entries right away. Okay, it's always crucial to see what's going on in the long term charts. Okay, always remember that a trend line or a trend in the weekly chart will always be more important than a trend in the hourly or 4 hours chart. Okay. When two trend lines clash onto each other, one coming from the weekly or the daily chart and another one coming from the intraday charts, being the 30-minute chart, the hourly chart, even the 4 hours time frame, all right? The trend lines on the longer time frames are usually more significant, okay? They usually prevail over the short-term ones. It's not always the case, but most of the times they prevail when they clash onto each other. Okay, all right. In this case, I'm gonna prove my point or show my point by looking into some charts. Okay, in this case, I am looking into the euro against the CHF on the 1 hour time frame. Let's assume we just opened up this chart and we saw this beautiful trending scenario, right? Those moving averages nicely pointing down, nicely parallel to each other, price nowhere near the 100, spending most of his time at the right side of the 50, in this case the below the 50 since we're in a downtrend, etc, etc. Okay, and then we begin looking for our short entries. Perhaps we could think, okay, this is a very well-defined retracement channel in this downtrend. We are going through now a pullback, and as soon as this retracement channel breaks to the downside, I will enter short here or here, somewhere around there. Okay, well, that's a very perfect trade plan. It makes sense. You're in a downtrend, you're looking for a breakout to the downside. It definitely makes sense, but we are forgetting a very important detail: what's going on in the longer time frames. In this case, let me show you this same chart but on the weekly time frame. Okay, let's go to the weekly chart and have a look what's going on there. Have a look. We are about to hit an uptrend line. All right. Not only that, but we also have the moving averages pointing up, parallel to each other. Okay, price nowhere near the 100, and we are bouncing very nicely off the dynamic area of support in the weekly chart. Okay. Remember, this is the weekly chart, and now we've retraced back to the dynamic area of support once again. And not only that, we have a very clear trend line coming around there, okay, which was tested once, twice, 3 times, and now we're about to bank onto that trend line once again. So what do you think? Would it be a good idea to take a short entry on the hourly chart? Let me zoom back into the hourly chart once again. Okay, on this beautiful downtrend, would it be a good idea to just as we try to squeeze yet another swing. Okay, we've seen many swings on this downtrend. Would it be a good idea to trade another breakout to the downside? Well, if we don't pay attention to the weekly chart, then I guess yeah, it would be a good idea. But if we really want to have a sound trade plan, okay, we really want to have to be aware of what's actually going on as a whole picture in that currency pair in all the time frames, I reckon it would not be a good idea to take that short entry on the 1 hour time frame. Okay, in the weekly chart we are clearly uptrending. All right, actually it's also a channel, but nonetheless we are clearly uptrending. And not only that, but we are also hitting that level of long-term support, which is that trend line, okay, and the dynamic area of resistance, support, and a previous swing low, okay, right there, former resistance, now turning into support, etc., etc. Okay, it definitely will not be a good idea to enter short there. I am not saying the hourly time frame, the trend on the hourly chart will not prevail over the one on the weekly chart, and this thing might indeed break through. I am not saying that, you never know. Okay, but trading is all about probabilities. All right. Trading is not about foreseeing the future. No one can know what's going to happen. What's important is that you have the chances, the probabilities on your side. And in this case, remember what I said before. Longer term charts are more significant than shorter term ones. Okay, if you have an uptrend on the weekly chart, as it is in this case, you are about to hit an area of support, you may want to not take the downtrend or trade the downtrend on the hourly time frame, because this is the weekly, and as I just said, the weekly chart will always be more significant than the 1 hour time frame or the 30 minutes time frame or the 4 hours time frame. Longer time frames more significant, guys. Always remember that. So in this case, it will definitely not be a good idea to enter short in this case, okay, of that setup on the 1 hour time frame. All right, I'm going to show you now another example. In this case, the euro against the actually, let me zoom in a little bit for a clearer view. Okay, right there. The euro against the Canadian dollar, also on the 1 hour time frame, we have a clear uptrend. Okay, nice moving average formation. Moreover, we have another nice up channel. Okay, which we can look to try, perhaps waiting for a retracement back to the channel bottom, and from there, bang, searching for a long entry. Right? It's perfectly valid. Okay, I definitely can see this setup having some potential. All right, very nice channel. We have support here, so how about if we wait for a retracement to search for a long entry from there? Okay. But once again, are we seeing the whole picture here? No, we are just seeing what's going on in the 1 hour time frame, and that's not enough. Remember, what we've got to do before considering an entry is to verify that there are no conflicting signals coming from the longer time frames. All right, now once again, let's have a look at what's going on in the longer time frames: the daily, the weekly, the monthly. In this case, it's the weekly, the time frame that's showing some contradictory signals. Okay, have a look at this. Once again, it's the same case as in the previous example. The euro against the CHF. Now I'm showing you the euro against the Canadian dollar on the weekly chart. Okay. We've just seen the hourly time frame, okay, of this currency pair, the euro against the Canadian dollar on the 1 hour time frame, and now I'm going to show you, like I was saying, the weekly chart. Okay, just wanted to make clear, guys, that you guys understand that we are looking into the same currency pair, just on different time frames. All right, we have a downtrend line marked in red in my screen, which worked as support there, and now it was retested and it held. Okay, it's been held. It's been holding price below. Not only that, but also we have this level, previous level of support, now working as resistance. Okay, have a look at how price found support of this level, and now it's working as resistance once again. Okay, so we have two different elements of support, resistance, going against our long setup on the hourly time frame. Okay, once again, we have a weekly downtrend against an hourly uptrend. Well, as usual, like I always say, you never know whether this thing is going to break through or whether it's going to go down, but you do not have all the chances on your side. All right, in this case you are betting against the longer term setup, against the longer term outlook. Okay, and that's not a good idea, guys. Always keep always keep the chances on your side. Always try to look at the whole picture and verify that in the longer time frames you are not going to, either entering long against long-term resistance or going short against long-term support. Okay, price action trading, which is basically what I do. Price action trading in the direction of the main trend. It's all about once you have a trending scenario, buy support and sell resistance. In this case, if you enter long on the 1 hour time frame, you will be entering long against resistance. Not only that, but moreover onto longer term resistance, and that's definitely not a good idea. Okay. Alright, I'm going to show you now another chart, another different setup. In this case is the USD against the CHF, what we usually know in the forex market as the Swissy. In this case, it's a 4 hours chart, and once again we're seeing a very nice downtrend. Okay, we'll have a look at those moving averages. It's definitely a clear downtrend in a scenario. Okay, we are seeing also a range information as of lately. Perhaps it would be a good idea once price breaks below this channel, okay, entering short at this level, somewhere around there in the direction of the main trend. Basically, you're trading a breakout in the direction of the main trend, which is a very valid trading strategy. I do it very often myself. You spot the trend, you spot the range, the consolidation area, and as the range gives way in the direction of the main trend, you enter short. That's perfectly valid. But as usual, in this case we haven't checked what's going on in the longer time frames. In this case, let's zoom out into the monthly chart. Okay, very long-term chart, and then I zoom out a little bit farther out. Have a look where we are right now in the chart. This is 1995, this is 2004, and this is right now 2007. Have a look at that. We are banging onto a very long-term support. Okay, the current market price has found support at that level twice already throughout the last 10 years, actually 12 years. Okay, throughout the last 13 years actually, let's be accurate. Throughout the last 13 years, price have found support at this level. Okay, are you sure you want to enter short right now? I mean, you are definitely entering short against a very long-term support. Wouldn't it be a good idea to wait for price to break through and somewhere around here, begin searching for short entries? But around this area, are you really sure you want to enter short there? It's not a good idea, guys. Once again, remember, trading is all about buying support, selling resistance. And if you enter short here, you will be selling support. Not a good idea. You want to sell resistance, you want to buy support. You do not want to sell support. Okay, support. Once there in 2004, once there in 1995. Okay, you don't want to enter short now, man. That's very clear in my mind. You want to wait for price to give way and somewhere around here begin to search for short entries, because that would mean that this level is not working as support anymore. It's been breached and you have green lights to search for short entries. But until that happens, you don't want to enter short at this junction of the chart. Okay, you definitely don't want to. So in this case, the best thing you could do on that 4 hours time frame, okay, on that 4 hours time frame setup, the one that I was just showing you before, remember, in this clear downtrend, perhaps we could be trading the breakout of this sideways range somewhere around here. Okay, that would not be a good idea, because once again in the monthly chart we are banging onto support. All right, buying support, selling resistance, that's all what trading is about. That's all what trading is about, really. As I always say, you don't need very complicated trading concepts, you don't need very complicated indicators, none of that. What you need is to spot a trend and buy the breakouts of in the direction of the trend, or buy support, okay, buy support, or in a downtrend, you know, sell resistance, you know, sell resistance. You don't want to sell support, as in this case, especially long-term support. That's you know, that's a no-go in my book. Okay, so that's about it, guys. You know, in my opinion, checking out what's panning out on the longer time frames, it only takes 1 minute, 2 minutes. You know, let's say you find a very juicy trend in a scenario. How long would it take to just flip onto the daily, weekly and monthly chart? 1 minute, 2 minutes, 5 minutes? It's not a big deal. Okay, it's not, you know, it's not too time consuming, and it's necessary. In many cases, it will save your position from basically from a loss. Okay, imagine you entered long on this setup, the one that I was showing you before, the euro Canadian dollar, on the 1 hour time frame. Okay, if you remember, let me zoom out to show it to you guys again. Imagine if you had entered long right now, okay, around this area, and you didn't look what was going on the weekly. Okay, the weekly was clearly telling us that we are banging onto long-term resistance, and well, as you can see, price has already retraced back down quite a little bit. So like I say, always zoom out into your daily, weekly, monthly chart. It barely takes 2-3 minutes perhaps, and you will be adding chances. Okay, you will be making sure that you're not about to enter in a short-term trade that is about to bang onto longer-term troubles. Like I say, it barely takes 2, 3, 4 minutes, and it really is important. Okay, it will keep you away from many losses. Alright guys, that's basically all. Just a quick tip, okay, or one of the pre-entry requirements before entering a trade. You know, it's a routine of mine. I do it always whenever I'm seeing a nice trading opportunity. I always zoom out to the daily, weekly and monthly, see what's going on there. Do I like what I'm seeing? Am I perceiving? Am I seeing contradictory signals? Okay, indications that I might be entering long onto long-term resistance, or short onto long-term support. Is that the case? If it is, you might be better off passing on that trade. Okay, if it's not, if everything, you know, if you see no conflicting signals on the daily, weekly or monthly, then go ahead, you are good to go to take that short-term trade. Okay, but always make sure you verify that you're not getting yourself into troubles before even opening up your position. Alright, okay guys, that's all for this video. I'll be seeing you on the next one. Bye bye.